Hello,
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 Jamie.
everyone. Hi, Steve.
Hello, Jamie.
How
Happy
was your
November
weekend,
7th.
Steve?
My weekend was really nice, actually. It was a lot of football, not too much going on. It was great.
It was also a great weekend. Finally getting that California weather back here in California. You know, it's nice and perfect. We like that. Absolutely. So, want to thank everybody for taking the time to come hear what we have to say today. Of course, this is Monday, and of course, May, and Tuesday is the Tuesday. Isn't that right, Steve?
Tuesday of all Tuesdays that we wish we could get behind us, yes.
And before we know it, it will be behind us. And of course, as
Will it
traders,
be?
we're all used to, insanity being part of our daily lives. But boy, we're getting an extra double dose heaping of insanity as of late. So I'm just ready to go back to the normal levels of insanity. You know what I'm saying?
Yeah. Yeah.
Okay. All right. Well, before we get on to the exciting stuff, as always, we have to make the lawyers happy. So just want to make sure everybody knows, and for those most of the time you already know this, but for those of you who are new to the Monday or any of the other webinars, I just want to make sure that you're aware of the fact that we are publishers of information. So please don't take what we have here today as a recommendation to buy or sell securities or anything else. The information that we share with you is strictly for this. So if you need the services of a registered investment advisor or a registered broker, plenty of firms where you can seek that out very easily. All right, so I think we should be pleased with that. So before we get on to the itinerary, I just want to remind everybody that we do have quite the community built around the world-class technology that is Trade Ideas. If you have not been taking advantage of the free trading room that's hosted by, he does a really good job in that trading room years now, probably 500 people plus in there at any given. Takes the time to walk through his methodology and give explanations as to why he's taking certain trades, even chases some of the AI trades and all of the other alpha generating things that are coming out of his specialized windows. So if you haven't been taking advantage of that, by all means, you have nothing to lose. And along those same lines, not only do we have office hours on Mondays, but we also have 2 additional webinars on Wednesday. Dan and Brad do the Q&A session, and then Steve follows it up with his Trade of the Week webinar later in the evening on Wednesday. And then we writing studio on Thursdays, and I write shotgun with Andy. So all in all, 4 different webinars every week, week in, week out, showcasing the technology and the methodology behind what we've created here. All right, so as Steve and I have been preaching, and as well, all throughout past weeks, you know, we've been in clump range, and Steve's going to take you through that here in just a second. When we got out of the clump range, and of course, one day before the election, guess what? We're back in the clump range, as fate would have it. As always, we're going to talk about Holly and what she did today and how to take advantage of some of her plays, get some of that hidden alpha that you can't necessarily see in the reports. And interestingly enough, as everybody is already aware, not only a gap up today, but a pretty significant gap up. And of course, things just get a little bit trickier when you have a large or even a medium-sized gap up or gap down. I think Steve's going to do a pretty good job at kind of filling in the holes there on what we can do when we do see a large gap up or gap down. So Steve, if you're ready, I think I'll just pass it over to you for a second, and we'll look at the good old
The insanity.
prints in the sand here.
Let's take a look at the insanity. Well, for those of you who have always wondered what up is, S&P pretty much gave you a pro gap today. Pro gap is any type of a gap that numerous down day. So here we were on Friday, glooming and gloom, and everybody's taking 9 days down in the market. Well, what's funny is that the 9 days down really wasn't that bad. I mean, it was a little bit of a, if you dropped it into percent, sounds great for great writers that need to get paid for headlines on Friday. 9 days down in the Dow and the SPY has not happened since 1980. But, knowing what you knew going into this weekend, if you were to take some big bets going into a weekend prior to this election, just like that Brexit weekend, this is the kind of stuff that you've got to be expecting. Otherwise, it's just kind of gambling. But this is one of the biggest mother of pro gaps I have ever seen. Face ripping, short squeeze rally just really, really took the face off of the people who had conviction going into the weekend that we were going to continue down sliding for whatever reason. And as I back out again here, the prior range that Jamie referred to was the clump range, the Clinton-Trump, who's going to win, get us out of this election cycle type range price action. Well, we dipped down 1, 2, 3, 4 days below, which a lot of people will probably attribute to news coming out of the FBI, only to see that news reversed on a Sunday evening when no one was really watching except the futures, and everybody who was establishing new short positions down here just finally discovered what a pro gap is when it goes against them. So no fun. The volatility is there. In Wednesday's webinar, we all agreed at Trade Ideas the call of the week is going to be cash. Once again, it's the third time this year. The other time was Brexit. But going into a week of known volatility, what's the point of trying to really nitpick and pick out some decent volatility that's just around the corner? Who knows what's going to happen tonight? We could have a gap down back tonight. I don't really know anything until Wednesday morning. Elections are probably done, and even then there's going to be some more fits to be thrown. Really nasty action here, guys. I don't quite know what to say, but I haven't really seen very much of action like this other than what we had in the volatility of the Brexit. But keep in mind tomorrow could be nothing as volatile as today, maybe a bit weak in store. It's definitely in store for volatility. So we don't know what's going to happen in the election very tightly. It seems to be giving us some cues as to what it wants, but we're really not going to know until it's over. So in the meantime, sitting on your hands, very light stuff, risk off, that kind of stuff is probably the order of the day. Really that much to look at other than the cues bouncing right off of their known perfect support that we had drawn on Friday, right back up into perfect resistance in one fell swoop over a Sunday night evening gap. So it's goofy out there right now, guys. The trade of the week, the word of the week is volatility and continue to be so. So be careful. There's really not we have to go on right now when we have this type of action, and this is very unusual. We all agree. We're probably not going to see another election like this for a while, hopefully, but the market's reacting accordingly, and that's what we've got. So good lesson on the pro gap. When we get to Holly, we'll talk about, a gap up is not the most ideal day for the AI Holly, but I think she did a pretty good job today of managing expectations. Holly doesn't have the luxury of gapping up or gapping down for the final score. The AI has to make sense of what the market price action has been given to it. But when Jamie gets to that point, we did have once again some continued confirmational bias at the 10 o'clock hour. There was not one short that was put on by Holly today. They were all longs, and they started spitting out egregiously at 7 o'clock. It was an interesting strategy, which was, I'll let Jamie get to it, but it was horseshoe, and the horseshoe action does require some sort of a gap to make that work. So not surprised that the horseshoe had a really good day, and after Jamie talks a little bit more through today, I've got another strategy that we'll hit on days like today for gaps. So, with that, Mr. Jamie. All right. Got you.
Yes, yes.
Yeah.
As a matter of fact, I was.
Not anymore.
Talking to myself over here.
Yeah.
All right. So I take it you can see my screen, right?
We can see the screen. Yep.
Okay, very good. All right, so let's just not skip ahead there. Let me get this guy out of the way. Okay, before actually I got this with a little tab pulled up here. Just want to give everybody a peek that Holly continues her departure. The gap continues to widen between her and the SPY. You know, did have a losing day last week, which is good to see every once in a while. Lets us know that things are working as they should. But before that last losing day, last Friday, 94 cents. Just a very nice string of winning days. And of course, even though we don't like red, we like to see Holly taking some small losses here and there, just to let
Remind
us
us
know
that
that
she's
everything
not
is
absolutely perfect. She's
right.
statistically
If she always
probable,
wins,
but
then
not absolutely perfect.
absolutely. Not that it's really good, but it's kind of good to see her with her red days of losing, just because we know that no matter what system you're running, even if it's a statistically inclined model, such as Holly, every system's going to have its losing days. Righty. So moving forward into what did Holly do today on this large gap up day, and it was pretty interesting to observe her today. As Steve said earlier, if we pull up the all trade time, one trade sneak out CC about 6 minutes into the open, and then we didn't have anything. None of the strategies fired until right at the top of the hour, and then between 7 and 7:10 here, we can definitely see what we like to of long trades being issued via Holly. And of course, we can look at all the trades today. You don't even see one short trade in there. All of our action was long today. And of course, all of these trades being issued in a 10-minute period. From our experience, anybody who's been watching in the past, typically that's giving us a directional bias. We got a couple of episodes in the prior weeks where we saw that to the downside, and today we saw it to the upside. And of course, looking back in retrospect, let's tighten this up a little bit here, and then we can see, huge gap up on the SPY, and then a continuation, what we like to call the old gap and go. Now let's break down the strategies that Holly had show up today. Of course, we had a total of 9 strategies in the hopper today, 6 longs and 3 shorts, and of course we can see down here, these are the guys that did not fire anything. Our friend down here, Penn Island, did not have any trades today. These guys had 1 respectively, but we can see the majority of the action, as Steve indicated earlier, was from the horseshoe up, turning in some nice numbers both on the risk off and risk on side as well, and then on support, kicking out 11 trades. So it was pretty busy today as well. Overall, on the risk on, a nice little tidy profit as well. And
What's cool though is those trades that have a bit of an 11 trades. Look how close they kind of corresponded to how the testing came out. It's difficult to do that with 1 trade or 2 trades, but when you start to get 10 trades and higher, it's always kind of curious to look at the aggregate win percentage score and see how they compared to the prior evening.
For sure, because 63.6% accuracy on 11 separate trades came into the session at 65.3. So just not even 2 points below expectations, whereas this guy on 13 trades outperformed our expectations, 65 versus almost 77% accuracy today. So we certainly like to see that. Of course, then you have these guys, and of course, beautiful part, yeah, they only had 1 trade each. So yes, they're showing technically 0 win rate, but that's only on 1 occurrence each. So when we do see these large trade counts and beating or hanging right with the averages, that's great because it tells us, hey, the statistical we thought it was going to do. Statistical probability, hey, it means something. Let's ask Vegas why they don't want card counters in their casinos, and they'll probably not going to tell you, but if you get caught doing it there, you'll find out pretty quickly what
Doesn't
we're
matter
doing
what
here.
game you're playing. The zeros on the roulette wheel. If you want to play baccarat, the advantage always goes to the bank. You got to pay a commission to take that advantage. So the bank always gets, the casino always gets one way or the other.
Yep, whether it's in the casino or in this environment, which some people are just casino, but and that is the house has the advantage, whether it's this house or a house in Vegas. And the only way to survive long term is to have an edge. It's always been the case, and it always will be. Now, the edges have changed since I've been in the business and Steve's been in the business. You know, we used to have edges way back in the olden days, which we consider the 90s. We started trading with an edge, but guess what? Edges go away. And just about every edge, or what we could even term inefficiency, in the marketplace since that point in time when Steve and I first started trading, they slowly get sealed up. You find an edge, it gets sealed up. You find an edge, it gets sealed up. Until all of the edges that existed from market infrastructure are gone and have been gone for quite some time. So all we can rely on now is data mining and attaining for ourselves a statistical edge. Enter Holly. So let's get into the trades today. So we already know that she established this directional bias in the first 10 minutes here. But what we're going to do now is look at some of the trade rounds. And today what I want to do is pick out a couple of trade rounds and a couple of trades where we can showcase going risk off. A lot of people get it in their heads. You have to pick one before the day. So I'm going to go risk on or I'm going to go risk off, which everybody needs to keep in mind. Holly is designed to show you if you're trading in this capacity, this is what is happening. And there's a couple of different modes, risk on and risk off. So the first guy we're going to take a look at today falls into the category of trade arounds. We have trade arounds and we have risk off. So SCG is the first guy we're going to take a look at. 5-minute candles is what I have here on the intraday. Just want to make that a little bit larger so that everybody can see. So we see here Holly's entry price after I double click here is clearly defined by the blue box over here, $71, corresponding with the entry price here. And we can see this is the entry bar in which Holly said everything's lining up, statistically strong, I'm going to get long on this one right here. So we see the 71 and what promptly happens. Well, why did Holly get out of the trade? We'll enlarge the exit reason column over here. Stop hit, 26-cent loser. So Holly quickly gets in and quickly gets stopped out. But what do we do when we see Holly in a red position, or maybe it was green earlier and now it's red? Doesn't really matter why it's red. If it's a freshly issued symbol and we see red on the blotter, we go and we draw a line, or for you guys, I've drawn a straight across here so we can see the price. But what you would want to do in the live market is create that price alert so that we can be alerted to the second excursion above the entry price here. And once we set that up, of course, that's going to auto trigger, but we can see what happens here. So as we like to say all the time, this statistical weight here, and of course on support, is what generated that trade. So right off the bat, we know we have a 65.3% chance of that thing doing what we think it's going to do, which is go up. Of course, sometimes timing is just off. So these statistical plays are good for the entire. But as we can see here, Holly quickly gets stopped out. So we draw our price line, our price limit alert. We tell the system to alert us on the second excursion. In the meantime, it puts in its bottom and starts heading back up to that entry price. Now at the same time, if we're trying to give ourselves a little bit of comfort, so when this thing back above again, we say, okay, well the bottom has been put in here, it bounced, and now I'm going to take a look at the daily, and I can see that wick corresponds just perfectly down to this little area here. So we can think to ourselves, okay, Holly was just a little bit off on the timing. The probability is good for the entire day. I noticed on the daily it's coming down to this little support area here. It's already put its bottom in here, and now it's
worth repeating. The probability of the trade goes on for the entire day, and this is a classic example visually of how Holly was just a little bit early. Maybe a few more stops had to be run there, but the probability was still intact for the day.
Right, and this is the equivalent, I know I use this example a lot, but only because these memories are etched and burned, and Steve can certainly, he traded in offices back in the 90s. We did this exact same thing here, but we were taking advantage of other traders. Somebody's like, oh, I just got stopped out of stock ABC.
Yep.
Well, that guy was just a little early. Of course, we go through the same methodology. I'm like, hey, this looks really good on the daily. This guy just got stopped out. I'm getting a much better price. I'm going to take that trade, right?
Mm-hmm.
But now you have that person, quote unquote, writing shotgun on your desktop so that you can see all these high probability plays, and through repetition and this methodology that we're illustrating right here, you will get the hang of Holly. It's always great when she gets something, calls it, and it just immediately goes, but that's not all the time. So this is learning how to trade around a Holly play. If it never makes it back up here, it's a non-event. There's nothing to lose. Nothing to lose whatsoever.
Yeah, and the only thing to be gained was to show a demonstration of good risk management, which Holly will always do.
Right, and of course, that trade had $1.20 in it, the most potential out of any trade on a dollar for dollar basis, but not quite on the percentage basis. But still, I don't know anybody that would not have liked to have been in such a move, because once it came back through here and caught some traction, it was just off to the races. And then, of course, once we get traction, we start noticing other patterns like, hey, okay, once it got up here, it was breaking out of its daily range, which would have been an excellent time to add to the position. Right? Micro consolidations, these are also excellent times to add to positions, right? Which is kind of, if you're you have your hands full, have high probability, then you have to. So figuring out when to add to a position, can be kind of the last thing to develop. Identify these little range breaks, and then these nice little micro consolidation patterns. It's going to make your life a little bit easier on adding to a winning position because it has that additional potential. All right, so not to spend too much time on this one. This is just the first one. So let's now take a look at this guy here. This is also a trade around, all right? Something that went red, but is making that second excursion that ends up working. So VNTV, Victor, Nancy, Tom, Victor. Once again, blue box corresponds with the entry price. Holly gets long here, and of course, stop hit. She gets stopped out as soon as she, gets into the trade. And, there's the stop price. So barely made it, but, a stop is a stop is a stop. Of course, if we would draw our line or create our price alert just like we did right here on that second excursion, looks just like the other one, SCG, not quite as much potential in this one, but it's the pattern that we're interested in. So Holly's a little bit early on the second excursion. Boom, we do get that traction. We had a little bit of pay dirt on the second entry on the VNTV. So these are good examples of what we call the trade arounds, where Holly doesn't, she gets stopped out or goes red. We simply draw that line straight across for the second excursion and then monitor it accordingly. If it never gets there, it's a non-event. If it does get there, hopefully you get this type of action. Steve, anything to add to these trade arounds, or am I leaving something out, or it's pretty simple.
I'm just talking
pretty simple and straightforward.
Into my mute here. Jeff brings up a good question, and that's probably a question other people are wondering about. On the end of the day, win percentage, how is that calculated? Is it calculated at Holly's exit or end of the day? The answer is it's calculated at Holly's exit. So you're correct that win percentage could actually be higher if certain plays, for instance, that one that we looked at, SCG, was to continue on and be counted in the mix, it would have been counted for a higher score. So we're giving the benefit of the doubt to the lesser of the two when we calculate those win percentage scores. So you are correct. The win percentage scores are calculated on when Holly exits, but they can be improved upon or, the opposite if they go the other way. But in your example there, yes, the actual loss was calculated in the win percentage, but that particular trade went on to go on for a very nice move into the rest of the day and was not calculated into the win percentage. So we're trying to do our best to keep it, to conservatism, I guess, is what we should say.
Absolutely. Okay, so these are two examples of the trade around, but now we're going to take a look at two examples of what we call going risk off. And just to clarify, when you see Holly and her risk off statistics, this is Holly sticking to her rule set, right? Just like any trader would do, all right? If the profit target gets hit, it gets hit. If I get stopped out, it gets stopped out. Or if my timed hold with no stop out or no profit target getting hit, my timed hold expires, she's going to exit as well. Those three characteristics, those three exit reasons. But if we take a note of the exit reason here, risk and profit save. Now, let's see here, ESG. This is a prime example of going risk on because we can see that Holly got into the trade and then she took herself out under the profit save functionality, which originally designed so that Holly would not let a winning trade turn into a losing trade because very detrimental to results, right? If we're up 50 cents, we don't want to end up to count a defeat. So with the profit save functionality, if Holly gets into a trade and then she starts getting very volatile gyrations or wicks like you see, then she might just get out of the trade and go, you know what, things are a little wicky here. I don't want to let my winner turn into a loser. I'm just going to go ahead and take my money. So you can see Holly kicks in, and she was only in that trade for about 22 minutes. Entry time 7:22 on the exit time, which is going to correspond with this wickiness that we see in the 720 to 75 bar right here. So that's fine. You know, if we're in this trade with Holly and we see Holly exiting the trade, we have to put our trader's hats on because, as we say all the time, Holly can see charts, but she sees them we do. All right. So first and foremost, when Holly recommends this and says I'm gonna get long some ATSG here, right off the bat, I see beauty in this entry because it's also breaking out of that little range that it's established since the open. And then this is one that just, boom, we get that immediate put. Even if you bought the top of the candle here at 15 bucks, no pullback, just a nice little escalation to this area here, and then the stock takes a little breather. Now, these little breathing periods right here, these little micro consolidations, for those of you who attend on a regular basis, you've seen this over and over. This is something that just happens to show up in Holly trades, and it's a really good indicator. You know, we can call this the NR7 formation or micro consolidation, but the takeaway is that buyers and sellers are equal during this period. Clearly the buyer is present. It's up here, now it's going sideways again. So whether we watched Holly on the initial entry or whether we went ahead and said, okay, I'm in a 200 lot here, we get this push up here and a new range has been established. We popped a high here, now we're going range bound again. And of course we can see this little pattern likes to repeat itself. There's the second range break here. So once again, if you're attuned to seeing this pattern, very good time to add to the position here. And then when we get this upward momentum here, you know, whether you decided to peel out a half of your original 200 here and then tack on the 100 back as it breaks again, those are all variables that you can kind of play with. You know, I'm in 200. On the first pop, I'm going to get out of 100. I'm going to give the other 100 back to my stop loss or a break-even call, which, you know, you can't broke exercising that type of stop loss mentality because, you know, our entry price, once again, $14.95. Take half off up here if we felt like satisfying that little demon that sits on our left shoulder called greed, and then the right demon that sits on our right shoulder that's called fear. You know, fear and greed, like, oh, I'm profitable. Okay, well, let's take half off. Let's give the other half back down here, and then you got the bigger alpha lot. right? And of course, once you get familiar with this pattern, you'll be more and more apt to not only hold what you have, but to add to the position when you see these formations occurring here and these secondary breaks of the range, probable entry that Holly called in the first place.
And it's not surprising that we saw about 10 or 12 of these horseshoe up patterns through today. This is a typical example. If the market had gapped down or opened flat or gapped down, we wouldn't have seen these, but nice to have a different palette of strategies lined up. We had that way for the last week on the short, but there was no
Let me go into detail, because what Steve said about we had a nice strategy on deck that was accommodating to today's market conditions, and that's the beauty of what you're seeing here. We never know from day to day what exactly is going to happen, but having Holly and a bevy of 9 statistically weighted strategies showing up on the chance that today's market session, 1, 2, or 3 of those strategies are really going to be the perfect fit for today's market action. Of course, we had 9 strats and 2 really produced. So we had 2 out of the 9 really engage this type of market occurrence, which is highly interesting, right? So tomorrow, I've noticed the complement was a little bit less has recently been. We've been having 14 strategies up there. So to see a lesser amount today and still see 2 that latched on to this pro gap market and we're still able to produce, I mean, that's highly encouraging, from a developer standpoint, from a user standpoint, from just an overall weighting of the technology.
That's the way I look at it.
I'm more pleased with it today.
Yeah, it's like coming off the World Series. It's like, okay, we got a couple of left-handers in the bullpen. We got a couple of right-handers in the bullpen. We got it covered.
Mm-hmm. Yeah, what's that saying you like to, what's one of your patent sayings? Chance favors the prepared mind.
Yep.
And in this case, the market favors the prepared AI.
Strategy. Prepared
Exactly.
strategies.
Okay, so real quick here, let's get on to this next final risk on position, because we've got an additional ticker and a lot more setups to show you guys, or setups, but things that this one specific strategy produced today, which are very kind of jaw-dropping. So real quick here is the trade produced by the horseshoe up, DAL, everybody knows Delta Airlines. So we can see the entry price, 43.58, and once again, just a real beautiful entry, very similar to the last one, as it was, once again, we can see just breaking out, which is from a human standpoint, we like to see this. And then as soon as she recommends it, no pullback whatsoever, and just a nice slow stair step up to highs today. And of course, once again, we can see the profit save functionality kicks in. Holly gets a little nervous in this wiki area right here. She's like, I'm taking my money. But once again, if we're in it and it's our friend in our nation making yet another visit, and we can see right here, once it percolates a little bit, then it's off to the races again, which is a really good time. Once you can identify these simple little range breaks, very good times to the positions. And sometimes they do it 2 and 3 times in a day. Good example here, initial push, second break here, little consolidation area, or step up, even a period to add a third entry there.
Hey, let me add something here, if I could. Can you show the daily chart with the old left out?
Yep,
Okay.
yep. What are my
So,
expectations?
yeah, so what are our expectations? Well, great. Oh, look at that. It's breaking out for the most part there. Great question by Jeff or by Douglas. It seems that you are day trading. Can these strategies work for longer term? Doug starts off as a day trade. All you have to do is zoom out and look left. Before you know it, you might find a chart that's breaking out or gives you a reason to stay in. The real genius and the value in AI and Holly is in the idea generation of the entry. The exit really is up to you. Holly has to get out by the end of the day, but when you find a chart that's breaking out on volume to your parameters as a trader, nothing wrong if the other half can work and is a swing trade. But every trade starts in the Holly anyway. Every trade starts with a short-term strat. Many times we zoom left, we start to find opportunities that we could be leaving a lot of, keep a third or keep a half on if it makes sense. There's no right or wrong. That's why we call this a gray box. Black box is something you turn on and on inside. A gray box gives signals and manage their abilities and their risk to manage the exits. So to answer your question, a lot of these trades do start off as day trades and close as day trades. Something that you would not have normally been really nice, sweet-looking day trade. Swing trade for another day or two.
Right, and not trying to oversimplify, but it is pretty simple. Whether it's a swing trade or not depends on, how you perceive the daily chart, and is it going to be running into resistance, support, things of that nature from a technical standpoint. And then, of course, we all know that, we can make more money holding overnight, but that comes with additional risk in the form of nobody knows what's going to happen.
Strategy called the 5-day bounce that shows up every now and then. And if you catch it right, the 5-day bounce can turn into a nice dead cat bounce for a couple days. But, Holly has to get out before the end of the day. So just another scenario of an oversold situation that a nice, decent entry was brought to your attention, but you've seen before many times where there might be another day and a half of meat on the bone as the dead cat bounce, comes into a very, very oversold daily. So there's many different scenarios. Not always a breakout. It could be a nice reverse. So it could be a buy on support. They found a really nice marry up to a nice support zone on the daily chart. So again, it becomes your code for. Before we move on, you guys are going to talk a lot about wait for the 8. There's a custom formula for wait for the 8 strategies. I did just put that into the chat window. If somebody who doesn't have a formula, if you'd want to copy paste that and put it into a Word document, forward, because we're going to talk that worked very well once again in a gapping market. We've had wait for the 8 short sell, but we also have one we've been playing with here called for the 8 gap edition. And Jamie's going to show you a few of them that came out early morning just as Holly was spitting out long trades at 10 o'clock Eastern. Wait for the 8 started to spit out some really interesting trades. And again, what's going on is the price action has gapped up, but it's waiting for the fast line moving averages to come and catch up to the price and be the guiding hand that helps move that price higher. That's what this particular strategy is looking for. I fully anticipate a lot of you are going to want to have a copy of this strategy after Jamie shows you some examples. That's how you forward with it into the chat window. We've got a lot of videos on how to implement it. And thirdly, if you're just brand fresh and have no idea what that means, but you're really liking what you're seeing, you can feel free to email steve@trade-ideas.com. Custom formula on the back end for you. So Jim gives you examples here of what this thing was actually spitting out today and why you might want it on a day like gaps.
My pleasure. So first on the list, of course, if you direct, this is 30 minutes time, and make sure we're looking at today's action. 7. So, Entry price 56.24. Looks very similar to some of the patterns that as soon as it breaks out of that little, 5, 10, 15, 20 minute
It's waiting for
consolidation
the
area
8.
there. Boom. Once it gets on there, boy, it just, takes off, straight up to above 58. So almost a 2-point run in MOH. And then, of course, once we get used to seeing these types of moves, even an additional opportunity to tack on the position, little staircase that we see there. And then the elevator action starts happening. But in any case, pristine entry right off the bat, happens to coincide with her directional biases as well. So that's MOH. TNA, not quite as pretty, but hey, still the same. The first, let's see, we had 68 started occurring, but once again, look what we have here. We have this little micro consolidation used to seeing already, so we know how to react to this. Once again, makes things a little sloppy with the wick there. So whether we use the wick, if you're a purist, or whether we use the candle bodies here, the pattern and the excursion outside.
Yeah, if you're already somebody who has the code and you're asking for it, it's in the chat window. Just click the plus button on the chat window to expand it. I've got wait for the 8 code, and then I have the wait for the 8 cloud link, which is the actual configuration link. So for those of you who are already asking me for the cloud link that have the custom code, it's in there. The chat window should be working, and then again, if we get towards the end and nobody got a copy of it, -ideas.com for everything. All right, what next?
Right. As we continue to look at these, also take notice, these are pretty liquid, these are big names, liquid names. We have, Citigroup in here. And not much, but 49.66 was the, was the nice, easy entry right here. And then plenty of opportunity to cycle out of that thing for some type of profit. Of course, HAR looking very similar to the first few that we saw. Just a really nice entry right off the bat, and then just straight up to the top. Took a little breather right here, but unless you're really on top of it, maybe you didn't have time to catch that.
Now, the majority of these are going to work best in the first hour and a half of the market, because that's when the 8 period is starting to catch up. The day, some more sloppy type of setup. So we're really liking and focusing the first hour of this particular alert once they start coming out, because that's really where the magic is in the early part of the day.
Right, RJF, let's see, JP Morgan, another one of the big banks, right,
Mm-hmm.
right here. Nice, beautiful entry that we had here. What was the price on that? 69.42. So let's just kind of get down here and see here. Come on, mouse. All right. So just once again, another beautiful entry here. A little pullback right here, but using some, stop loss, just some commonplace stop loss, like looking at the prior 15 minutes. This one might have came close, but probably not quite. But in any case, kind of a nice vacillation in that little range here, whether you took it here or whether you identified the range break here. Nice opportunity in JP Morgan, big, thick liquid bank stock, Citigroup, lots of alpha in what we're seeing right here. So Steve, there's several. I mean, there's a dozen of these guys on here. Looking at the time, I don't want to run out of time here, but let's just pull up, some of the other ones. PFG, kind of a non-event there.
No foul.
Yeah, same thing with here. So the earlier ones, and of course this little guy right here, PFPT. It's like the first 10 that this guy issued today from that 7 o'clock hour, either look like this or little consolidation areas and then off to the races. So certainly something interesting on this one, because we've had the short version for a while. This one is the one that Steve adapted specifically to the gap up.
Right. So we still need to adapt one to the gap down, which has not been done because it needs to be explored.
Right. So see, not only does from observation of her, But, you know, it's interesting to see what's happening with this because this was a base that Holly has been optimizing on the short side, and then we're taking that information and we're working it as a human on this side of the fence. So, you know, the reason I'm pointing this out, it's because Holly is not a black box. Holly was never designed to be a black box. Holly was designed so that the human can interact with the machine and both can is sifting through and processing mountains of data, things that we can't do. So by using her for the statistical property and then coupling that with our technical ability, we can drastically improve Holly's results once we get used to it. It's a game you're learning to play. So, you know, there is a chance that you might hurt the results, right? But it's a learning process. And these chart patterns that we're pointing out here, they're not advanced geometry or trigonometry. They don't contain any formulas or, you know, it's not rocket science. It's simply repetition and being able to identify these, you know, nice little excursions. And then we already know they're coupled with statistical probability, right? So it's the human working with the machine. It's working very well and continues to do so on both sides of the fence.
Mm-hmm.
So Steve, before we bring Scott in, we had a stock that
we don't have much to give
up.
this week, but we had one.
Yeah, everybody should remember CWEI, right? And the setup price that we can see right here was $87.91 that we gave out to everybody on Friday, and we can certainly see
on the daily.
If I just back this out a little bit here,
there he is.
It was an interesting ride, up and down and back up again.
Well, if you guys recall, it's that candle just to the left of the blue arrow. That was our washout bounce candle. I said, hey, this is a washout bounce candle in its purest form. And this just happens to be CWEI, which has just been a short squeeze mother driving people crazy. So, geez, even in a down market, look at this thing. Last week, it could not be stopped. So, proud that we had that one marked up. We don't have a whole lot for you today. I think we had Zoes that was actually triggered, but pulled back a little bit and still not doing a whole lot. We may just have to re-trigger that one. You know, look at that. It went through by a penny and pulled back. Particular sell has like 19 million shares in the float, which isn't much, and still has like a 30% short float. So I think we'll keep an eye on this and do like a trade around like we do on Holly sometimes. The first one didn't work, but let's see if we can catch some momentum to the upside. If this market does take off and move higher and lift all boats, this could be an early CWEI, you know, short squeeze kind of a thing. That's really the secret sauce going on this one. Not so much the pattern, but knowing that it's got under 20 million shares in the float and a good 1/3 of them are short. So we're always trying to keep an eye on these and try and change lubricants and try not to miss them. But other than that, guys, like I said earlier, to be in cash, the story of the week is probably volatility and neck snapping gaps. It's going to be a week, you know, that we're going to have to get through, and so there's just not a whole lot of simple, quiet setups that are sitting on out there. So cash is a position. Livermore said it. Some of the best money he made was with his sitting, not with his, I feel like I've got to do something and get some action going, otherwise I'm not doing my job. That's not the case. So, yeah, that's all we've got for you today in terms of possible setups, other than just be careful, cut your size in half if you're going to trade. This election is going to get through us here sooner than later. We'll find out on Wednesday what the market really thinks, I suppose. Yeah, the email is steve@trade-ideas. I'll go ahead and type that in here for you, for the people, because I will expect a few people are going to need some help with this one.
Steve, did we want to include the ASM washout candle setup?
Well, let's just make an honorable mention of it. You know, again, I did a little bit of tweaking to my washout bounce to try and find some that are opening closer to yesterday's close, not gapping down so much. and it's limiting it and giving me a little bit more quality setups. That's the only one that would be worth watching. It's a $2.35 stock, but you know, it had a nice little washout on the open. May try and move higher. All those people that bought last week kind of got maybe stopped out. We'll see. We'll see what happens, but it's kind of an honorable mention. But again, not a lot of super conviction, not a lot of five-star setups here today because of the
Right.
week, because of the week that is, and that's just the way it is, guys.
Yeah, well, I'll go ahead and drop these into the chat. There's at least a couple of things that might be interesting, so you can drop those into your price alert window via the cloud link. Also, too, if anybody needs help with anything, I'll just go ahead and drop my email address in the window as well for any of that custom formula help that you might need. All right, Steve. Well, I can see we got 5 minutes left, so I guess we better bring in Scott. Let him tell everybody about the coupon codes that might be in play this week for people who are non-subscribers to take advantage of.
Yeah, sure. Thanks, Jamie.
Sounds good.
So something we like to do to thank everyone for attending is give out a little way for you to join up with trade ideas and save. Use the code AI Trades, all caps, like you see on the slide Jamie's showing, and that saves you 15% off the first month or year of premium, or 10% off your first month or year of standard. You can also download a PDF with this information. Let me just go ahead and pop that into the handouts panel while we're talking. So if you're already a subscriber and want to save on upgrades, you can also use that code if you're a monthly subscriber. Just go ahead and subscribe to one of the premium versions, either the monthly or the annual, and it'll overwrite your existing subscription. If you're on the standard annual, just email us at support@trade-ideas.com, and we'll help you sort out the upgrade. You can find that download in Handouts panel. Go ahead and click on the plus to expand it. You can get that PDF. It also includes some handy contact information. I want to remind everyone the recording will be available later tonight or tomorrow morning of this webinar. You get an email reminder with the same email address you registered with. Also, keep an eye out for invitations to our Trade of the Week webinar on Wednesday if you're on the Trade of the Week sign-up list. If you're not, you should sign up for that so you get the invites. Thanks, everyone. Contact us with questions, info@trade-ideas.com. You can follow Steve Gomez on Facebook at Today Trader or Jamie Hodge at QuantBot. Our CEO is at Trade Ideas One. That's Dan Merkin. Go to Trade Ideas Pro on Facebook.com, and you can like us there to get information about events and deals that we don't normally post about on other channels. Steve and Jamie's emails are right there on the handout that you can download or on your screen, J Hodge or Steve at. Info@trade-ideas.com is the best place to send technical questions. So thanks all. Any other questions, just email us, either email Jamie or Steve or info@, and thank you all for attending. See you in the next webinar.
All right. See you next
Hey,
time.
thanks everybody. Keep the powder dry tomorrow.